In 1988, Larry Fink was a 36-year-old bond trader who had just made one of the most expensive mistakes in Wall Street history. While working at First Boston, a single miscalculation in interest rate predictions cost his firm $100 million. Most traders would have been blacklisted from the industry forever. Instead, Fink used this catastrophic failure as the foundation for what would become the most powerful financial empire the world has ever seen. With 8 colleagues and just $5 million in startup capital, he founded BlackRock in a 4-room office suite, driven by an obsession that would reshape global finance, the belief that technology and data could eliminate the human errors that had nearly destroyed his career. The name BlackRock came from the founder's desire to create something that sounded both solid and mysterious, like a fortress built from dark stone. But Fink's real innovation wasn't in branding. It was in his revolutionary approach to risk management. Haunted by his $100 million mistake, he assembled a team of mathematicians, computer scientists, and economists to build something unprecedented, a computer system called Aladdin that could analyze millions of data points to predict and prevent financial disasters. While other asset managers relied on gut instinct and traditional analysis, BlackRock was constructing a digital brain that could process market complexity at superhuman speed. By 1992, just 4 years after launching, they were managing over $2 billion in assets. The technology that emerged from Fink's humiliation was becoming Wall Street's crystal ball. The first major test of Fink's empire came during the 1994 bond market crisis, when rising interest rates decimated portfolios across Wall Street. While competitors suffered massive losses, BlackRock's technology-driven approach allowed them to not just survive, but thrive. Their assets under management doubled to $4 billion as investors flocked to the firm that seemed immune to market chaos. This success attracted the attention of PNC Bank, which acquired BlackRock in 1995 for $240 million, while allowing Fink to maintain operational control. The acquisition provided BlackRock with the capital and institutional backing needed for their next phase of growth. But more importantly, it validated Fink's core thesis. In an increasingly complex financial world, data and technology weren't just advantages, they were necessities for survival. Fink understood that the future belonged not to stock pickers or bond traders, but to those who could harness the power of passive investing. In 1996, BlackRock launched their first index fund, betting that most professional investors couldn't consistently beat the market. This wasn't just a product launch, it was a philosophical revolution that would eventually reshape how the entire world invested. While competitors dismissed index funds as boring and unsophisticated, Fink recognized they represented something far more valuable: predictable fees from assets that required minimal active management. As markets became more efficient and active management fees came under scrutiny, BlackRock's index funds became money magnets, attracting billions from investors who wanted market returns without the drama of trying to beat the market. The late 1990s brought BlackRock face to face with every empire builder's ultimate test: how to respond when everything you've built is threatened. The firm went public in 1999, raising $664 million, but the dot-com crash that followed tested every assumption about their technology-driven approach. Unlike many competitors who doubled down on risky bets, BlackRock used the market turmoil as an opportunity to prove their worth to institutional clients. Their Aladdin system, now managing over $100 billion in assets, became the industry's go-to solution for understanding and managing risk. Major banks, insurance companies, and pension funds weren't just investing with BlackRock, they were paying to access the same technology platform that had made BlackRock successful. The 2008 financial crisis transformed BlackRock from a major player into an indispensable force in global finance. While investment banks collapsed and hedge funds imploded, the U.S. government turned to Larry Fink's empire for salvation. BlackRock was hired to manage the toxic assets from Bear Stearns, help stabilize AIG, and oversee the government's response to the banking crisis. The firm that had been built on the ashes of a $100 million mistake was now being trusted with trillions of dollars in emergency interventions. This wasn't just consulting work, it was the ultimate validation that BlackRock's approach to risk management had become essential infrastructure for the global financial system. By the end of 2008, they were managing over $1 trillion in assets, having grown 20-fold in just 2 decades. But Fink's masterstroke came in 2009 with the acquisition that would cement BlackRock's dominance for generations. Barclays Global Investors, the creator of the first exchange-traded fund, was struggling in the aftermath of the financial crisis. For $13.5 billion, BlackRock acquired not just a competitor, but the crown jewel of passive investing, the iShares ETF platform. Overnight, BlackRock became the undisputed king of index investing, controlling nearly 40% of the global ETF market. The acquisition brought their total assets under management to over $3 trillion, but more importantly, it gave them a stranglehold on the fastest growing segment of the investment industry. Every investor who wanted broad market exposure at low cost was now, directly or indirectly, making Larry Fink richer. The 2010s witnessed BlackRock's evolution from asset manager to global power broker. Their Aladdin technology platform was now being used by institutions managing over $21 trillion worldwide, more than the GDP of the United States. This wasn't just about investment management anymore. BlackRock had become the central nervous system of global finance. The firm's research and market analysis moved markets, their proxy votes determined corporate governance at major companies, and their risk assessments influenced regulatory policy worldwide. When BlackRock recommended that investors divest from fossil fuels or embrace ESG investing, trillions of dollars followed their guidance. Fink had built more than an asset management company. He had created a machine that could reshape capitalism itself. The COVID-19 pandemic marked BlackRock's final transformation from financial giant to planetary influence. As markets crashed in March 2020, governments worldwide turned to the same firm that had helped navigate the 2008 crisis. The Federal Reserve hired BlackRock to manage corporate bond purchases, effectively making Larry Fink's empire a partner in U.S. monetary policy. European central banks followed suit, bringing BlackRock into the heart of pandemic response efforts across the globe. While other businesses struggled to survive lockdowns, BlackRock's assets under management soared past $8 trillion as investors fled to the safety of index funds and government-backed programs managed by the firm. The technology that had been built to prevent one trader's mistakes was now being used to stabilize entire economies. Today, BlackRock manages over $10 trillion in assets, more than the GDP of every country except the United States and China. The firm that started with $5 million in a cramped office suite now influences the retirement savings of hundreds of millions of people, the investment strategies of thousands of institutions, and the governance policies of virtually every major corporation on Earth. Through their index funds, BlackRock is typically the largest shareholder in Apple, Microsoft, Amazon, and Google, giving them unprecedented influence over the companies that shape modern life. Their Aladdin platform processes over $30 trillion in transactions annually, making it perhaps the most powerful financial technology system ever created. Larry Fink, the trader who once lost $100 million in a single mistake, now oversees an empire that touches virtually every aspect of the global economy. From a failure that could have ended his career, he built not just the world's largest asset manager, but a new form of financial power that makes BlackRock not just a company, but a force of nature in 21st century capitalism.